If you followed my videos, you know I'm not working from a script. I'm not a TV personality or actor or whatever. It's just me sitting in my man den. Anyway, um, I want to talk about the role I play in the options market. I would be referred to as a market maker on a small scale, of course. But think about it, the market as, I hate to use the term casino, but very much like a casino. And I supply the chips that the players play with. In other words, if you're going to trade options, you've got to buy options from somebody in order to be able to sell the options or to exercise the options. Now there's and so I provide those chips, if you will. I provide the options that they're going to trade or exercise. Now, to understand my customers, there's two reasons essentially that people buy my options, because they're paying a premium. They're paying me money to buy my options that I write. And there's two reasons. Okay, number one is it's a hedge. They're expecting the market to go one way or another, and they want to lock in their price beforehand. So let's say I've got a $10 market price on a stock, and I sell options for $10.50. So they'll pay me 50 cents to have the right to put stock on me at $10.50. Now, if the market goes down, if the market price goes down, they've done very, very well. If it goes up, they don't do as well, because remember, they've paid me a premium. And on that scenario, I would expect 30 or more cents per share as my premium. Okay, let's say it goes up to well, no, let's just say it stays at $10 when those options that I sell expire. And remember, I'm selling weekly options. In other words, my risk is only 5 days. So let's say it stays at 10, and therefore they put that stock on me at $10.50. They've made a 50-cent profit. I've made a 30-cent income. So basically, the cost basis of the stock that I bought was not $10.50, but $10.20. Still 20% capital loss. Now, that's fine, because now I've got the stock that I'm going to write to cover options, call options that I'm going to sell. So let's say I have call options at $10 and get 30 cents a share premium. So now the combined premium between the put and the call is 60 cents. And so I've got a net profit of about 20 cents a share. I've got a cash flow much better than that. I got a free cash flow of 60 cents. So, all right, so I'm basically the stock upon which I'm basing these options, whether it goes up or down, I don't care. I do care how fast and how far it goes, but I don't care which way it goes, because basically I'm getting a premium on the buying and the selling. So when I combine both of those, if the stock hasn't going crazy, I'm still having good free cash flow, good income, and have the means to continue to make good income. So on my September statement from Robinhood, I show a capital loss of about $16,000. And that's more than the value of my account, liquidation value of my account. Well, how did that happen? Why do I have any money left? Well, during all that time, I was taking in September, I took in about $9,000 in premiums. But also my liquidation value of my account did drop about 4,000. And I don't care because the stock, the number of contracts that I can create and cover have actually increased. So my income revenue has increased. So now we're seeing a period over this month of where HBI, which is the stock I've been using the right options, has pretty much stabilized in a trading range of $7 to $7.50. Now my revenue stream continues to be very good, which means if it'll stay in that trading range for any period of time, my actual liquidation value would go up, or I can draw out part of that income to use personally if I wish to. If I were depending on that revenue stream for my living expenses, it would serve that purpose. But otherwise, it's going to continue to increase my liquidation value and my number of contracts I can write to increase the revenue stream. So it's all about the revenue. It's not about capital gains or losses. But how much income tax am I going to pay on the premiums I've collected? The answer to that is zero. Because the capital losses from the decrease in the value of the stock that I'm trading in more than offsets the amount of revenue I've taken in. Now, last year I had a taxable income from this of about $3,500 roughly. It's on my website. That I actually had to pay capital gains tax on, meaning that my revenue exceeded the capital losses by $3,500. But that doesn't speak to the free cash flow situation. I had built my account up to the point where last year, the year that I had the $3,500 capital gain, I took out $10,000 to use for personal reasons. And yet my income stream diminished just briefly after I took out the 10,000, of course. But now it's back up to the kind of income I was generating before I took out the $10,000. So, magic money. I guess it's the next best thing to be in the U.S. Treasury, where you print your own money. Now, how can the market hurt me? If we see a tremendous recovery in the market and it's very fast, then the price of my stock that I'm using to cover these contracts goes up, which means I can cover a less number of contracts. So it will impact my revenue stream. But believe it or not, my liquidation value of my account will increase. But my account will only be liquidated after I'm dead and gone and somebody's just settling my estate. So, which, will no longer the income generated will no longer be important to me. Although my oldest son is now into this as well, and he'll probably take it over and continue the work I've started. But at any rate, if you're looking for income, this is the way to go. I mean, the ability to be able to draw out, say, $1,000 a month, which I could easily do, without seriously impacting my revenue stream, that's real money. And when you're retired, that's even better real money. So anyway, that I wanted to explain that part of what I'm doing and why I do it, because I mean, that part's very, very real and very beneficial to me and to other people who do the same thing, because all the options that are bought and sold somebody had to write the option. And that's what I'm doing in a small way. Right, I'm creating those chips that the players play with at the casino. If you have any questions, be sure to ask them using the comments, and I'll do my best to answer them in a timely fashion, or make a video that answers the questions. So anyway, I really appreciate it if you'll subscribe, like, and notify, so that you'll know when these videos are published, which is pretty frequently. I publish several a week. So anyway, have a good day. Make some money.